Welcome to Property Showcase, the podcast that brings you closer to the service providers that can inform your decisions about how you buy, manage and research top investment opportunities. Be informed and become a better investor with Property Showcase.
Well, g'day everyone, it's Tom Gilmore from Smart Property Investment here, Partnerships Manager. Jumping into it today, guys, to kick us off, we're going to dive into the realms of commercial investing. And to start us off, I've asked Scott O'Neill, Director of Rethink Investing, to come shape this podcast. Commercial investing is often something that people, on the other end of the table, or the other end of the scope, I should say, and they're quite heavily involved in. But I thought it'd be really good today just to sort of, I suppose, not necessarily pick and prod, but use Scott's experience here as to why now might be the best time to potentially jump into those commercial investing portfolios, or even just get a little bit more information as to why this could be a good idea down the line too. Scott, how are you going?
Good, thanks, mate.
Good to hear. I think now's a good question to kick us off. Why now is a good time to get into commercial investing?
A couple of reasons. I think residential property has reached record yield lows across the country in most areas, so rents haven't really caught up with price growth. It's quite unaffordable in many locations such as Melbourne and Sydney, and people have an income problem in this economy. So you can't leave your money in the bank and in a high interest savings account and expect to live off it anymore. That is a broken strategy. Right now, we're dealing with, the share markets are really up and down at the moment, more so down. So, it's a little bit scary for many people to think, where can I create a passive income out of the money I've got on me? Residential used to be a bit of a default move, but we all know that residential is a lower yielding asset. You're there for the growth, and the growth in recent times hasn't been as good as many experts have predicted either. So it begs the question, why would you only do residential investing? Commercial actually offers you multiple times better net yields. So you're looking at, 7%, 8% net returns still in capital cities. And as a bit of a comparison, you're lucky to break even. So a 0% net yield in residential if you're doing well. If you're not, you're actually negatively geared. So as a cash flow point of view, commercial is by far better. And that is the number one reason people are moving into this space, because if you look at like rough numbers of, a recent property we purchased, 500 grand, this was a industrial property in a capital city, and it was renting for 38,000 a year. Now, if you take an 80% loan, yes, you can get 80% loans with commercial. And at the current interest rate, that was about a 3.7. That investor was producing a $26,900 a year passive income. There was also a depreciation benefit in that, and that equates to a $517 a week income from a $500,000 purchase. So you think, why would I want to invest that 500 grand into a residential property to break even when I can instantly create a $500 a week income? Mm-hmm. So that's what gets people excited. Now, the risks with commercial are you can get it wrong if you buy the wrong asset, like unexposed retail shop, around the corner where there's not much foot traffic, and that goes vacant. You're going to have problems. But if you buy well-placed, well-tenanted, secure type businesses in good growing areas, you just mitigate that risk, and that's where my job comes into it. We are the only specialist commercial buyers agent in the country that I'm aware of at the moment, and we buy hundreds of millions of dollars of this stuff, anywhere from $300,000 small warehouses or medical suites all the way up to multi-million-dollar shopping centres. And with that amount of purchasing, you get a lot of off-market opportunities. And that's where it gets really exciting. The more off markets we get, I think the better quality deals come across our table. So we just help our clients buy those with our experience and due diligence process behind it.
Yeah, absolutely. Well, you touched on a really good point there. And this is certainly me. I think certainly before I met you is I think when a lot of people think commercial, I feel like they launch into, it could be like some shop front on Robinson Road in Newport Beach or something like that. Or perhaps they launch into the idea of, laundromats and things like that, which, give or take, that might actually work for a few people. It depends on your scenario. So the range of things that you are buying for people, there is sort of no real limit, right? And as you said, this is like your bread and butter. You do this daily with your clients. Give us a sort of a case-by-case scenario with, say, like a client, I don't know, maybe from last week or a week before. I mean, what kind of asset are they looking at, or what kind of troubles are they trying to get through now just to, I suppose, purchase this?
Yeah, I'll give you two types of clients. So one, an entry-level client. They're normally looking around the $400,000 to $500,000 price point. Many people have a couple of $100,000 in their super. So if you lend the rest, there's your 500 grand property. You need to buy correctly and carefully in that price point because there's not much selection out there. It's an area where you still need a good quality tenant and you need good reletability. So we need to, I guess, assume long-term that tenant will go no matter what. Even though that tenant might have been there for 20 years, we want to assume that'll go. And the reason for that is we consider the reletability of the property. If we know the rental market is strong, where you can find another tenant in a couple of months' time or 3 or 4 worst case scenario, that will give you a lot more confidence to buy the property. And you might find your tenant stays there for 20 years anyway. So it might not ever come to the table. But we're not the type of business that just goes out to the middle of a regional city where it's declining in demand and just buying it because it's got a good yield. We're there for capital growth too. So when you're buying in a good growing capital city location or major regional hub, then you do have upside for growth as well. So that's your entry level buyer. You're looking at, again, you could have a small accountant's office. You might have a small restaurant, warehouses where there's a little mezzanine. You might have a plumber in there who's got a thriving businesses and needs, room for his trucks and cars and pipes and all that stuff. You can have like F45 gyms in these types of things as well. Like there's lots of different types of tenants that go into these properties. And if you're near an airport or a major, highway that links up into the city, you're going to find that there's always a demand for tenant. On the other end of the spectrum, we have a lot of high net worth clients, a lot of, particularly farmers or business owners who have, large land holdings and they've got, basically an income problem. They've got a lot of assets. Another example might be your Sydney buyer who's got a multi-million-dollar house but not many other assets. So what they do is they leverage off their existing asset to then purchase one good quality commercial. And that might be, let's say, a $3 million, 6 warehouses in a row, or you might get a little small shopping centre that's got an IGA in it and a few different specialty shops off the back of it. Those are really exciting because you can strata title them. You can deal with 6 or 7 different tenants, which means you're never going to have a full vacancy. You might have 1 or 2 every now and then, but you've got the others protecting you, I guess. So those types of clients like that shelter of multiple tenants. We're always looking for good yield, 6, 7, 8, 9% net. The 9% are almost gone these days, especially with this last interest rate cut. That's just going to mean people pay more for this stuff. So we're seeing capital growth quickly happening in commercial. And this is something that your listeners need to note. Because of the rate cuts and even last year with the election passing, confidence is back in the property market. But I think it's even more so in the commercial property because people are looking for that income and that demand is skyrocketing. And, we're struggling to buy properties on market. And because it's such a niche, small space to invest in, you're going to be up against a lot of buyers every time there's a good quality property come up because there's not much to choose from. It's not like residential where you've got tens of thousands of houses to choose from. We might be fighting over a handful of properties each week nationwide. So that's when networks are very important to get these good quality deals.
Definitely. I can imagine, particularly if it's a good deal, you don't want to pass those things up. I feel like the scenario might be if you are looking to purchase this for clients, do you often, I'm not sure if you're allowed to say this, but do you just go out and buy it yourself?
For me, it takes 6 months to refinance. And once a year, I'll go off and buy 3 or 4 properties, which, my last round was a few months ago. So I'm out for now. But I guess the good thing is there's always enough properties and I do prioritize my clients. I have more enjoyment, growing my business than my own personal portfolio these days. I've, done very well out of property. I'm at a point where if I buy another, handful of properties, it will make no difference to my life other than my poor wife is probably going to have to deal with more rental statements and my accountant will charge me more. It doesn't make a big difference. It's just a numbers game. But when you get someone their first commercial property, I love that because it changes their mindset forever. They actually, unless it's to buy a family home, they don't really go back to residential after it, I've noticed. So just seeing people, get into the commercial space is something I've really enjoyed.
Yeah, okay. How long have you been doing this for now?
Running the business for about 5-6 years. So we've done 1,800 deals over the years, just over 700 million in purchases now, and that's growing every month. So yeah, it's not our first rodeo with this. And I think, every deal's different. And that's the exciting thing, particularly with commercial. It is so different every time because you've got to learn about a different industry or, let's say we're looking at office space. I've got to learn the office market. And that means I've got to read all these different reports about growth trends and what incentives are in leases and what types of tenants are looking and what vacancy rates are out there. And residential is quite easy to get data for, commercial's not. It's a bit of a dark science, in a way, because you need to sort of really understand the rental markets. And to do that, it's really on the ground research, talking to other rental managers and then comparing it to other states and cities. And it's just time. That's how you get that data, time and effort.
Definitely. Well, look, to everyone listening, how do these listeners get in touch with you?
Best way is just go through our website, rethinkinvesting.com.au, and we'll reach out. We've got property strategists that will do a free half-an-hour strategy session. We can work out if commercial's right for you. We also do residential for, foundation portfolios as well. So I guess working with this will help you get to commercial long-term, even if you can't do it right now.
Fantastic. Well, mate, I'm keen to learn more, so I might be getting in touch with you myself. But until then, speak soon. G'day everyone, Tom Gilmore, Partnerships Manager for Smart Property Investment. Kicking things straight off, guys. This topic is going to be surrounding the topics of understanding risk and buyer behaviour in the market. And to shape or uniform this segment of the podcast, I've got a very welcomed and favourite guest with me. His name is Goose McGrath. He is from Dashdot Buyers Agency. You would have heard him before on the SPI show and splattered across around the Smart Property Investment website and the bulletin that goes out as well. He's the author of a new book, which you might want to get your hands on, Limitless, The Renegade's Guide to Building Wealth Through Property. God, it sounds good. Goose, how you going?
Mate, Tom, I'm super excited to be here. I absolutely love any time we get to get on the microphone together, and thank you for such a lovely introduction.
Oh, mate, always. It was something similar before, wasn't it, too, that introduction I gave you?
I believe so, yeah.
Yeah, it was. There you go. Well, look, Goose, as I said, I've got you here to uniform or shape this podcast.
Yeah.
And we were chatting a little bit off air about the fact that there's quite literally so many buyers out there in the market right now.
Absolutely.
And such limited stock in not just, we're not just talking about Sydney and Melbourne, we're talking about all parts of the country here.
Absolutely.
And, whether you're going to auctions or, again, like private sales or, there's so many different ways you can go about it. Mate, what's going on? Why are people struggling right now?
So look, let's just get right into the meat of it, because I know these property showcase episodes are typically quite short, and I really want this to be massively impactful because as a buyer's agent who's in the market very actively, I don't know exactly, we're probably one of the fastest growing buyer's agents in the country. We've been, settling multiple properties in the last month. We're definitely very active. I have seen a distinct change, not only in marketplace, but buyer psychology, economics, everything in the last 2 weeks. And I think it really is important as we enter into this new phase of a property market cycle that buyers are preparing themselves to take the opportunities that they see rising up in front of them. So what we're seeing broadacre, as opposed to just in localized markets, we're seeing broadacre increase in buyers, stock shortages, all of this kind of stuff, which is increasing competition. Now, one way to frame that up, to give it some context that a lot of people will understand is, if you're liking it to sort of 2016, 2017 in Sydney, and other times where you've seen the same kind of market compression, market sensitivity, activity, action, excitement, fever and fervour, but we're seeing it on a really broad scale. We're seeing it in Tasmania. We're seeing it in Adelaide pockets. We're seeing it in Melbourne and Sydney and Brisbane. And I think that what we're actually seeing right now is a macrocosm of a whole bunch of different triggers that are changing the face of the way we invest. And the way I see it is we're moving into a 4 to 5 year macro cycle and a macro upswing. I think it's a really exciting time for the people who have the right mindset to be able to take advantage of this opportunity.
Absolutely. Well, look, you actually made a really good point there. So 4 to 5 years, this isn't going to slow down anytime soon. This isn't just a short 3 month, it's a phase, it'll fade out.
I don't believe so. And look, other people will probably disagree with me, and that's okay. But the way I see it, there's multiple triggers that are driving this current activity and demand. So obviously we've had RBA rate cuts again very recently, and that's obviously cheapening the price of debt, which means a lot more people are excited about getting into the market. It also has decreased serviceability buffers, which again is opening up people who might not have previously been able to get a loan, who can now get a loan. And that's pushing more people back into the market to capitalize on the opportunity to get properties when they maybe couldn't have, or potentially get them at a cheaper rate, which is exciting. On top of that, though, you have the first home buyer scheme, which is also putting pressure on lenders with longer waiting times for loan processing, which we're seeing huge effects there as well. But then, of course, even with the coronavirus, we're seeing a lot more pressure of people wanting to diversify into more stable asset bases and wealth bases, which we're seeing in property. But that's not all, because when you look at that, you can go, okay, these are seasonal fluctuations which may come and go in the space of a quarter, a half, or a year. But then when you couple that with the fact that since September 2018, there's been a 9% reduction nationwide in construction activity, domestic construction activity, and we've got record low building approval rates across the country at the same time as having the largest population growth in the OECD, we're talking about a macro supply and demand factor here. And this is not something that's going to go away in the next month, 2 months. This is not something you can sit on the sidelines and go, oh, it seems a bit active right now, I'll just wait. Because what you're going to find is that inactivity is going to be costing you huge amounts in opportunity costs when you try and get back into the market after 6 months and you realize actually nothing's going to change anytime soon. Does that make sense?
Absolutely. So you got to think about the listener, because you can be talking about an individual here. It's like, look, I'm trying to buy, I'm trying to do everything I possibly can, but the stock just goes immediately. It goes so quickly. And what can I do about it? Now, there's the obvious answer. There's the reason to get in touch with you. But why is it so frustrating right now? Like, what can people actually do to fix this? Because it's scary.
It absolutely is scary. And look, anyone who's ever listened to anything that I've ever had to say knows that I'm a proponent of, finding these ultimate deals, sometimes called unicorns, all of this kind of stuff. And I'm also been a massive proponent of buying under market value. But like any time that markets change or things shift, you've got to be prepared to change your tactics. And this is where I think more than anything, people need to adjust their psychology to root their values and their strategies in principles, not tactics. Tactics can be certain things like, do a cosmetic renovation or build a duplex or try and get something under market value. These are tactics, but the principles that you need to follow, they need to be immutable, everlasting principles that you can apply in any sector of the market where you can change your tactics to suit, which I always go back to the 3 core principles of cash flow positive or high yield, which could be typically 5% or more, solid growth pockets, and value add potential. Value add potential is an elastic thing, and that's where the caveats of tactics fit into it. So I think people need to adjust the tactics that they're prepared to deploy to take the opportunity that the market presents. And also, I think people really need to take stock of their risk profile, right? Because whilst it can seem as though it's not an intelligent idea to be participating in a competition or in a market full of competition, what you need to look at is the risk reward factor. And then you need to look at what is the probability of success versus the probability of failure and the cost of inaction. And when you can combine all that kind of stuff together, that's when you really start to take a more holistic view to investing, value investing, as Warren Buffett would say, and really looking at, okay, what is the probable likelihood that I am going to succeed in this outcome if I take this action? And what is the repercussion if I don't?
Okay, no, that makes complete sense to me. So we're not talking about just one particular investor here, right? So we're not talking about just the first home buyer. You could quite literally have 5 properties in your portfolio.
Yep.
And you still be facing the same issues.
Yeah.
Almost.
Oh, yeah. It doesn't matter. It doesn't matter really whether you are buying your first property or your 5th property. We're talking about macro market conditions. Now, I've always been a massive proponent that you need to get super granular and down to a street level, suburb level, and that still matters. And in fact, I would go as far as to say is it matters more now than it does when the market's calmer, because it's going to be hard to differentiate the difference between a good and bad investment. So you need to be even more diligent to make sure that you're not getting caught up in the FOMO and the hyperactive markets, which is where it comes down, to leveraging the right team, leveraging the right information, and all of that kind of stuff. But you're right, this is something that's affecting people, doesn't matter what level of investor they're at.
Yeah, all levels, exactly. So you got to give the people something here, I think. What can people do right now listening to this change? We're talking about, risk factors and buyer behavior and all these things. What can people do right now just to change the perspective on what they're doing? Obviously you pointed out getting on the macro level and not necessarily just looking at any particular asset or changing their risk, but what's something that people just be like, I've been thinking about this all wrong, or I could do it just a little bit differently?
That is a really interesting question. And I think that is going to come down to trust. Trust in yourself and trust in the people that you surround yourself with. And that's not something I say lightly, but you need to be able to, pragmatically look at the position that you're in and look at the position of the information that you're given and make a tactical decision based on the principles that you know to be true. And in fact, more than ever now, I would suggest that potentially if you've been sat out of the market and thinking I might wait, now's probably your opportunity to go and check what can you borrow, what can you get in finance, but also take a really forward-facing view and go, okay, if the market were to change and situations were to change, would I be overextending myself or not? Am I going to be making a very good and positive decision? And if the answer is yes, then I suggest you take action, because what we're going to see here is we're not not going to see anything slowing down anytime soon. I mean, we're seeing, double-digit run rates pretty much nationwide at the moment. And I think that if people really want one key piece of advice that I have right now, and this is not me as a buyer's agent trying to drum up trade and trying to excite everyone to get in the market. This is just facts. If you want to make the most of 2020, if you want to accelerate your wealth creation journey, if you want to position yourself to benefit from these kind of once in a decade scenarios and opportunities, then I would suggest you actually take action. And if you're scared about that, then it's an opportunity to look inside and ask yourself what you really want.
Yeah, absolutely. I think that's actually an almost important, when you are looking at yourself, if you are listening to this right now and you are struggling, the buy through listening this, you go, yep, all these things make sense to me. I'm coming across the same problems time and time again, every single weekend, every single auction that I'm going to, whether it be Sydney, Melbourne, or perhaps you're looking interstate. Perhaps now's the time is to actually approach you and either have that one-on-one conversation maybe to begin with.
Absolutely. And I would actually suggest as well, as you mentioned at the start, I've just authored a new book. That book, if you're not really sure what the principles and strategies that you should follow are, and if you're not really sure how to define your true purpose and understand exactly what it is you want and how to digest and understand your own risk profile, I suggest getting a copy of that book. And that's going to give you the tactics, tools, and strategies that you need to be able to identify your goals, your purpose, your mission, and understand where exactly you are in the investor cycle, what we call the Apex progression, and it'll give you a fundamental understanding of how to utilize the principles of the Holy Trinity strategy to affect your own personal wealth journey, whether you work with someone like me or not. If you wanted to get a copy of that book, I suggest just going to renegadespropertybook.com. For a limited time, we're just doing it free plus shipping. So it's actually costing me money to send all these books out, but I'm passionate about wanting to spread a message and help people and inspire people to make change in their life. And if that sounds like you, this is probably the book for you. So that's awesome. But if you don't want the book, or if you do want the book, but also you just want to reach out and chat to us, you can just reach out direct. I mean, we're open to having a chat and helping guide people to property success, whether it's with us or not. And you can just do that by reaching out at dashdot.com.au.
Sound counsel, mate. Thank you so much for coming in.
My absolute pleasure, and good luck out there.
Thank you. Till next time. G'day there, everyone. Tom Gilmore here, Partnerships Manager for Smart Property Investment. This is going to be a really interesting episode for all the Brisbane lovers out there. I've got probably what I would call the king and queen, Scott and Melinda Jennison of Brisbane from Streamline Property Buyers. You would have heard them on the Smart Property Investment show before, back in October, the 10 misconceptions about the Brisbane property market. And we actually just recorded another one quite recently as well. So if you want to jump on, go check it out if you haven't listened to it yet. Guys, how are you going?
Very well, thank you.
Yeah, that's the way. Look, I do have a few questions here for you guys, and I think it's going to build a bit of context around sort of how you guys operate, who you deal with, obviously what's going on in the world of Brisbane right now. Things are obviously quite hot. Things are obviously in high demand as well at the moment too. I think probably what separates you guys amongst any other buyer's agent out there is the fact that you are on the ground, you are there, you physically go see the properties that you're investing for your clients. What are you guys seeing being on the ground? What's changed since the last conversation?
Probably numbers. Probably the biggest thing. We did speak, as you said recently on the podcast, about the numbers that are attending open homes. 40, 50 groups through, multiple offers on properties, 13 offers, an auction with 29 bidders. And I think from our side of it, the opportunity for us to be on the ground and to give our clients a preview of the property before the open homes and have that private inspection where we can actually get in, have a look and do the behind the scenes work to actually work out what that property's like and if it's worth considering further for our clients.
Yeah, okay. I mean, it's quite a broad question really by sort of, what you're saying. I mean, you could really define it down into so many key categories, right? And everyone's probably going to fit into a few different categories, but could you expand upon, I suppose, obviously numbers is quite a crucial bit to what we're looking at here, but what is there sort of the five main things that have changed in particular that's happening in Brisbane right now?
I think if we're looking at five main things, we've got supply that is drying up. So we've got construction commencements are falling. We've got the number of properties being listed that is reducing. We've got increasing buyer demand that's driven by, let's give three things for there. It's driven by population growth. It's driven by good rental yields and affordability in Brisbane, and it's driven by affordability. Both home buyers and investors are really entering the market in force, and, buyer demand is really out of control in some pockets. But it's not universally the same across all of Brisbane. It's certainly more prevalent in some pockets over others. So desirability of location and location selection is quite critical when it comes to selecting, the right suburb for the asset that you're looking to purchase.
Definitely. Well, look, particularly for people who maybe aren't living in Brisbane who are listening to this podcast right now. I mean, we were chatting off air just a little bit about in terms of some of the auctions that you're coming up to. I mean, you're seeing groups of people that are, potentially in the 40 plus sort of excess groups. I mean, you've got a line of thongs we were joking about before outside the door just so you go into the inspection. I mean, that's unreal. Like the amount of people just for one property, you can imagine is just like what that would be doing to people who say wouldn't be necessarily experienced, right? I mean, if you're going to miss out on a property because, I just went for a higher bid than what you were willing to pay, then the next time you go in and pay, they're jumping at the chance and they'll do anything to get it. That's obviously quite an emotional buy. And obviously, I think we can all agree here. We do talk about it on Smart Property Investment. Emotion is a big no-no. How would you explain it to the people listening right now who aren't living in Brisbane, what you are seeing? Because that's quite literally it, isn't it?
Absolutely. So we're certainly seeing huge buyer demand, and we are seeing a lot of emotional buyers. The market's being driven by the owner-occupiers, but there's a lot of investor activity in Brisbane as well. So a lot of interstate investors are looking at Brisbane because it is more affordable and rental yields are a lot stronger than the southern capitals. I guess, the benefit of working with someone local is that we do get the opportunity to inspect the property before it comes up to the first open for inspection. So a lot of the due diligence that needs to be done and should be done when you're considering a property can be done upfront before we're monitoring current demand. So if we see a property that's listed, we're able to get through it within the first 24 hours. We can send details of that property to our clients so that they have time to consider the opportunity, and we can run some numbers for them as well. We will always inspect at the open home as well because that tells us real-time demand, and then it helps us to position buyers for a purchase. And some of the appraisals that we are doing on properties, the properties are actually going under contract for much higher than where we're appraising properties because appraisals are based on comparative sales, and that's historical data. So we are seeing a fast-moving market, and stretch factors of 2 to 3% above our appraisal range have to be applied or our buyers will continue to miss out. What we do often joke about is a lot of people do contact us and they do ask that we provide a service where we can secure a property under market value. But the reality is in Brisbane right now, if you are able to negotiate down on a purchase price, it means there's potentially no other buyers. So the property is not a high demand property. I think every property that we've purchased for clients that's been listed for sale in the last 5 to 6 months has been under multiple offer. If it hasn't, it's been because we've either purchased it off market and we've been able to negotiate directly with the seller to eliminate the competition, or alternatively, we've moved so quickly when it comes to market that other buyers have not had a chance to complete their due diligence, and therefore we're able to position our buyer with full disclosure up front before other buyers have the chance to complete the necessary due diligence.
Okay, interesting. Sort of paints a picture then. So obviously for investors and for their own occupier there, I won't obviously dive too much. If you want to sort of dive into the clients that they deal with, you guys can obviously get in touch and have a chat with them yourself. Moving, I suppose, a bit left field here, how do you see the proposed Queensland tenancy reforms affect investors looking to buy in Brisbane right now?
Look, the rental proposals or rental law proposals are in favour of the tenant to a large degree in Queensland. So it becomes essential and a lot more critical to select an asset that's not going to cause any problems for you moving forward. It comes down to good property management selection as well. If you are purchasing a property that requires maintenance, you can potentially reduce or minimise your net yield, which can be of concern. And certainly some of the proposed rental reforms are going to be really targeting property investors who don't maintain their properties to the required and the necessary levels. So some of those low-cost properties may cost a little bit more to maintain, and that's certainly something that Scott thoroughly reviews for our clients, being a builder. He's able to monitor and potentially predict any ongoing maintenance costs associated with holding that property. So I think that due diligence at the time of purchase becomes even more critical if the proposed rental reforms do come into play, because it's going to be so important for investors to select an asset that's not going to cause them headaches down the track, particularly if tenants are going to be pushing back on issues that then are going to cause increased costs and holding costs for an investor.
Okay, interesting. That sort of also paints a picture for me in the sense of, I suppose, again, how you guys operate. Now, you've got the boots on the ground. I think that's probably a large step above anyone else who's sort of, if you're a buyer's agent who, you're from Perth and you're trying to buy property in Brisbane, obviously you've got a bit of hard competition in front of you. So you've got the boots on the ground. Obviously, the team is expanding as well. We're chatting off air too. How do you guys operate differently to other buyers agencies, whether it be large or small? There's large firms and agencies, there's singular buyers agents. How do you guys work together with each client? Is it a different story every single client, or is it all the same?
Yeah, look, we're a small team, and I think that's what we actually give our clients. We've got really good connection with agents, so we do go and inspect the properties, unlike some others that we've been told that they buy sight unseen. Local agents don't really like that approach. But between us, with Melinda as a qualified property investment advisor, myself as a licensed builder, and Talia with property management experience, everyone gets us. So it's a whole team. They have access to us all the time. So they're basically getting 3 for the price of 1, if you want to put it that way. And we tailor each approach individually. So each search is individual for each client, and they have a specific strategy, whether it's just a simple investment, property management, the maintenance side of things, building, construction, development, you name it. They actually get that experience from all of us in the team.
Okay, it sort of makes me think now that would sort of allow you to identify different value adds in certain properties that you're looking at, right? Now, obviously, there's going to be certain properties for certain types of investors, depending on, the type of cash that I suppose that they've got in their back pockets or what they can get from finance. But what's the things that you would go and approach, or what's a positive way that you can look at when you're speaking to a client? Where are those value add opportunities? Is this going to be a good renovation? Is it affordable? Is it feasible? Yeah, I'll expand upon that.
Yeah, look, I think that depending on what an investor's risk appetite is and what their long-term investment goals are, we would tailor an approach that is specific for an individual investor. Now, for some people with a low risk appetite, that may be a standard investment, rent ready on purchase, buy and hold. And if that's the case, we can certainly assist with that and identify any ongoing maintenance costs to minimise any future upside risk. For those that have a slightly higher risk appetite, they are happy to consider opportunities where there may be some cosmetic renovation works required. So we can assist with not only costing out those renovations, but also ensuring that it attracts a better quality tenant and that every dollar that you put in is actually going to result in some sort of net return at the end of the project. We're currently assisting, or we've purchased properties where clients are looking at more structural renovations, so adding on extra bedrooms, extra bathrooms, and obviously that's going to only apply to those with a higher risk appetite and those that have, depending on their financial structure as well, those that have the appetite for, more risk and manufacturing more equity in the property up front. And then obviously the highest level is those that are looking to develop. So as property developers ourselves, we know not only how to find and source good development sites, but actually how to ensure that they're going to be feasible, that they're going to be manageable, and that they've got good access to all of the local services. So that becomes critical. There's certainly the opportunity in Brisbane for a granny flat strategy. In the Brisbane City Council region, it's not legal to rent out a granny flat under a separate tenancy agreement, so it's not always a yield play. Certainly in some other regional councils around Brisbane, it is legal, but you always have to think about who the target market is and whether that is something that you're wanting to add value to the property for, and whether in fact it will add value, because you've always got to think of who the next buyer is. And if you're adding a granny flat, you may no longer appeal to the owner-occupier market when you go to sell. So that's going to come down to the individual investor's exit strategy as well as what their yield requirements are.
Excellent. Well, look, to finish off, one good question would be, there's obviously a bit of scarcity in Brisbane, correct?
Correct.
It's hot.
Yeah.
People are buying.
That's right.
Things are
yes.
packed.
Yep.
So doing your sort of due diligence, why Brisbane and why now? Now it's time to defend your city. Why now is the best time to buy more than ever? Or could it be too late is a better question.
No, I think as we talked about with the numbers that are there, that's a positive thing. That many people looking at the properties, your property is in demand. I look at it as a positive way.
There's huge.
It's livable.
Yeah.
It's affordable.
I think, the buyer depth, as Scott just mentioned, is huge at the moment. And for every buyer that, secures a property, there's another potentially 5 to 10 people that have missed out, and they're still looking, and they get hungrier, and next time they offer a little bit more. And that's what really drives that price growth. But, more than that, we've got some good economic growth happening. We've got employment opportunities and prospects that are improving. The infrastructure development that's currently underway is huge, and it's going to bring some significant economic benefits to the local economy. I think also, the timing's just right. There is a huge imbalance right now between supply and demand, as we've pointed out on previous podcasts. So it's about identifying not just buying in Brisbane and, buying anywhere in Brisbane, but understanding at a local level the areas where there is even more mismatch between supply and demand, and looking forward to what Brisbane's going to look like 10 years from now, and not just looking at what Brisbane looks like today, because that may be very different. And if you want to ensure you're not going to be negatively impacted by future development, then it's actually about understanding not just the housing supply right now, but what the potential future supply may be looking forward into the future.
Excellent. Well, look, to anyone listening right now who could potentially be driving on the train, or however they're listening through this, whether it be on their computer or phone, how can they get in touch with you right now?
The easiest way is the website, streamlineproperty.com.au. All our contact details are there. You can book a consultation. You can call us on the 1300 number. But just jump on the website, streamlineproperty.com.au.
Fantastic. Look, I'm hungry. I'm buying this year, so I think I might be getting in contact. But guys, I'm looking forward. I want to get you guys in here again in the next few months, and I'd love to see how things have potentially changed for the better, hopefully. But very keen to get you in here.
Thanks for your time.
No problem.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.